Hi, I'm Christine Benz from Morningstar.com. How can retirees build balanced portfolios that emphasize income production? Joining me to discuss this topic is Morningstar's Head of Retirement Research for Morningstar Investment Management, David Blanchett. David, thank you so much for being here.
Thanks for having me.
You recently co-authored a research paper with Hal Ratner here at Morningstar, where you looked at optimizing portfolios for income production. Let's take a step back. A lot of times when retirees are looking at optimizing their portfolios, you hear a lot about focusing on total return. What's kind of the fundamental underpinning behind favoring a total return strategy?
Right, so total return is the combination of price return and income return. There's kind of two pieces there. And if you think about designing portfolios, the focus really should be on total return, because what do you earn every year as an investor? For better or for worse, people kind of have different focuses on the types of return. And there are investors out there who really like the idea of not touching, the value of their portfolio and just living off the income. And so those are the people that would really, I think, possibly benefit from an income optimized portfolio.
Okay, so let's talk about when you're thinking about optimizing a portfolio with an emphasis on income, let's talk about some of the categories of investments that would sort of move to the fore, that would get higher prominence in the portfolio versus that total return centric portfolio.
Right, so obviously with a portfolio focused upon total return, there's going to be two types of volatility. There's the price return and income return. With income return, you're really just focused on how do I create a portfolio that provides me a consistent stream of income, month over month, year over year. And then, along those lines, certain asset classes look a lot more attractive. One example of an asset class that becomes more attractive in an income space are things like long-term government bonds, because long-term government bonds can be very risky, right? As interest rates rise or fall, they provide a very consistent income year over year, for example. And so other asset classes like emerging markets debt, preferred stock, are examples of asset classes that really look more attractive from an income lens versus a total return lens.
So they might be sort of niche classes in the context of a total return portfolio, but they would get greater prominence. How do you think about sort of allocating across these various income-centric asset types?
Well, what we found in the research piece was that an income-focused portfolio is going to be a little bit less diversified. You're really looking at what types of asset classes create income and which combination of those asset classes makes it the most consistent over time. And so things like preferred stocks, you probably rarely ever see in a total return portfolio, but they are a lot more efficient in that income return focus.
Okay. In some respects, would you say that the income preference is a little bit irrational in that you're just focusing on one piece of the puzzle when in the end, doesn't it just matter how your portfolio grows over time?
It really does. I mean, in theory, it shouldn't matter whether you have to receive the income or sell a part of your holdings, your price return to receive the income. But let's be honest, people aren't always the most rational investors. And so I think that this is kind of acknowledging that there is a cohort out there that really does not want to touch the principal and just live off of that income at some regular basis.
Okay. So if I'm a person approaching retirement, how do I decide which camp I fall into? Do I pursue a more traditional total return structure, or do I try to build a portfolio primarily for income? How do I decide which camp to fall into?
I think that the vast majority of folks are going to be total return investors, because at the end of the day, you need a portfolio to provide income for life. And most retirees can't afford to just live off of the income from their portfolio every year. And so I think you have to ask yourself as an investor, do I really just want to have a portfolio that creates a consistent income where I'm not worried about the total return fluctuation, or am I more like everyone else? Do I really care if it goes down by 20 or 30%, and then build your portfolio accordingly?
Okay, David, thank you so much for being here to share your research.
Thanks for having me.
Thanks for watching. I'm Christine Benz from Morningstar.com.